Hello and welcome, everybody. I am Nigel Fellowes-Freeman, the founder and CEO of Kanopi, and I am very excited today to be joined by Lisa Carter from Clear Insurance for a kind of bit of just an out the blue conversation. There's a bunch of news that's happening in and around the insurance world, specifically in brokers and commissions, and it is the topic of conversation with a lot of brokers that I'm chatting to, and Lisa is absolutely in the middle of this in terms of someone that's kind of saw this coming a long time ago, has some, I guess, pretty formed opinions on advice and how brokers interact with customers. And so, Lisa, thank you so much for joining me and just jumping on and having a conversation around that we're maybe going to have in a transparent way, when I'm sure lots of people are having this conversation behind closed doors at the moment.
Oh, thanks, Nigel. Nice to chat.
For those who are under rocks, Lisa, and not seeing what's happening, could you frame up for me just what's happening on July 10 and maybe just frame up a little bit of the policy changes coming through?
Yeah, well, it's all around transparency of remuneration, and I guess the regulators' viewpoint is what they need to do to protect consumers, or what they believe need to be done to protect consumers, and that's around declaration of commissions, or asking consumers to agree to the broker receiving payment of commission from an insurer prior to them actually going ahead with the policy. So the work now for brokers is to obtain that, what they're calling informed consent from their customers before they put cover in place. So naturally, there's a bit of administration work and a bit of work for brokers to do to comply with that new requirement, which comes in July.
Yeah, thank you. That's a really great summary. Do you think it marks a bit of a fundamental shift in this broker-client dynamic, specifically in retail? Obviously, it's been a little different within kind of small business and commercial for a while, but this is, I suppose, a specific shift within the retail environment. Do you think it's going to start to open up different expectations from clients and maybe force brokers to start thinking about not justifying their roles or how they go about business?
Look, potentially, I think it's certainly becoming a more talked about topic, and yeah. I've had a number of brokers reach out to me personally to ask for advice or to ask for advice on how we went about implementing the fee-for-service model. So I'm really happy about that, and I'm very happy to talk to other technically competing brokers to give them tips if it helps contribute to the change I think needs to happen. But there's a lot of brokers in the high-end commercial space that talk openly about fees, and it depends on the customer, it depends on the broker. There's so many different types of insurance brokerages in the industry and so many different types of clients. So I think it's really relevant more so to that smaller end of town, so your micro SME and retail clients that potentially aren't as well informed when it comes to buying insurance. And I think, and that's who ultimately the regulators are trying to protect. So for the larger end of town, I think talking about remuneration is something that brokers already do very well, whether it be that you're on a commission model and or a fee-for-service model. I think it's still spoken about, but with those larger commercial clients. So I think the change is definitely more relevant to those micro SMEs and retail clients at this stage.
Yeah, I've had obviously having a bunch of conversations around this, and the alignment of I think it's Hollard that's just come out and kind of reduced their retail comms on SCTP down to 10% from 15%. And you can imagine, if you look historically, most carriers will probably follow in terms of commissions shared on that retail book. Obviously, they have come together, essentially, these two things. Is there a world in which it becomes more and more difficult for brokers that are working on a commission model to want to do this business? If you think about, I've been looking at a bunch of posts from brokers on LinkedIn around the requirements from them around documentation and all of the effort that it takes to write this retail business. If they're looking at a purely call it 10% commission model for this business with this extra compliance on top of getting consent, does it start to eke away at do brokers that want to work on a commission model actually want to write this type of business?
Look, it's a challenging class of insurance. Householders insurance is very difficult from a profit margin perspective. Insurers are struggling to make money out of household insurance, and it's just continuing to be the case with more frequent weather events and so on, and claims escalation costs, and now we've got tariffs to play with as well. So it is a tough class, and look, arguably it's probably the class that policyholders require the most advice and help on. So there needs to be a shift in the way that brokers talk to their clients about the value that we bring to them with arranging householders insurance and helping them at claim time. So I think there needs to be an upskilling in sales skills or soft sales skills when talking to clients, if you like, around the value that we bring as brokers. I don't necessarily agree with the argument that if commissions are going down, you can't maintain income. If you're working on a fee-for-service model, it's really irrelevant. You should be able to set your advisor fees as a broker who adds value, and you should be able to have that conversation with your client to demonstrate your value and hence the fees that you charge. So look, there will be very price-focused clients, that is for sure, and the competition from the retail insurance market is tough. I mean, it's very competitive. So it all falls in line with our position that you just need to charge a fee for service and demonstrate your value, and customers that are looking for that experience and looking for help from a broker will pay the fee. They will happily pay it.
Yeah, it's interesting, isn't it? It's I think having maybe kind of brokers haven't had to make this kind of real strategic decision around how they want to approach the market. It's kind of always been, this is how it has been done. And it feels like these accumulation of things are starting to force brokers to really think a bit more strategically about how they want to approach the market, how they want to position their business. If they are obviously from a revenue model perspective, does it have to be how it's always been done, or actually can you do it differently to position yourself differently? And also, I remember from our last conversation, position more as a risk advisor, in terms of that is really the job here of advising on risk versus going out and finding the most competitive policy. It's actually like thinking about the other piece of what brokers do, not just maybe the more operational bit of just getting the policy in place.
Yeah, that's right. It's a perfect opportunity now for brokers to really reassess the way they do business and shift their thinking from that transactional, get the volume through, sell all the policies, to that risk advisor mindset where we're advising our clients on risk. And the pressure from the regulators is not going to let up. So, and it's pressure from consumer groups and so on as well. And I've heard a few people in the industry say that, you know, commission just it doesn't pass the pub test anymore. There's just so much out there in the media, particularly around the strata insurance discussion now, where the general public are becoming more aware. So it's the perfect opportunity for brokers to take a step back and think, okay, well, how can we shift to that fee-for-service model, and what efficiencies can we find in our business, whether it be through implementation of new technology, new procedures, outsourcing, admin and I know a lot of brokers use overseas admin staff. So what other efficiencies can you bring into the business to help keep the profit in your business whilst making that change to the way you engage with clients and how you collect your remuneration?
Have you found different systems and technology help with that burden of making sure that maybe the larger brokerages that can maybe absorb some of this compliance overhead and still maintain margin? When you're thinking about the smaller brokers, maybe they're looking at this and thinking, I'm not sure how I do that in terms of still run the business, have this extra maybe operational overhead. Is there any ways that you've done it certainly in the business that's kind of really helped you as a broker move into this new world?
Definitely. It's our processes and our procedures and the way we interact with our clients from that first phone call is very systemized. So all our team, we know how to engage with a new client, and our existing clients have the same experience. So because our systems and our procedure around advice are so set in stone, it's a very easy process. So we're not trying to do things differently each client interaction. It's that same process of risk advice and then through to the ultimate transaction of selling the insurance policy. So that alone brings efficiencies in the business. So and then of course you can enable that or make that quicker through good tech. So there's so much opportunity there, and ultimately, of course, the AI tools, and that's obviously an exciting space that will continue to evolve. So there's plenty of opportunity to find efficiencies, in my view.
Yeah, lots and lots. Do you think that this, we're starting off in retail, do you have a view on, play it forward 24 months, have you got a view on whether this goes further through the industry, out of purely retail and into other lines of business or other areas of broking?
Look, it's a hot topic. I think I would love to see it change for the entire industry, for retail and commercial wholesale products or wholesale clients. And it's not necessarily that easy to be able to flip the switch. You've got large international brokerages, small brokerages. We're talking lots of change around systems and processes and procedures and financial models as well. You can't just change a financial model of a business that has been operating in that way for a long time overnight. So look, there's lots to consider, but I think it would be quite a few years away before the industry moved to transparent remuneration for both retail and wholesale clients, I would say.
Is there anywhere globally that does it, Lisa? Is there anywhere, like if we looked overseas at other models that have been fee for service only, is there any broking markets globally that do it?
Well, look, it's pretty common in the corporate space. So you'll find your global and corporate teams at the international brokerages. That's how they work. So and that's been the case for a long time. So that's very much time-based fees or pre-agreed fee structures where typically there's no commissions involved. So it depends on what part of the broking market you're talking about. So definitely typical in the corporate space.
Yeah, but not maybe kind of in the kind of retail or small commercial space globally. There's no kind of models to point out that this country has made this policy change away from commission and to kind of fee for service, and it's been kind of super effective in the small end of town.
Yeah, well, it's a different conversation. So your global corporate brokers obviously are dealing with large global companies as their clients who need to manage their risk, and it's a very different conversation to, say, a small retail client that has a cafe around the corner who has a very different risk and insurance profile and needs to a large international business. So that's where the shift needs to happen in the way the insurance broking industry engages with clients. It should be talking about risk and how you manage your risk rather than just selling a business pack policy or selling a public liability policy. So that is where we'll be able to demonstrate our value and then be able to quite happily and confidently say to a small retail client, our advisor fee is X because we've given you this advice, not here's our quote for our business pack policy and how does that compare to other quotes you've received? So it's just a different conversation.
Takes away from value. If I know we're taking a bit of time here, but just have to ask one more question, Lisa, if that's okay. I'm sure there is a bunch of brokers now. You obviously said that there's a few folks already jumped on the phone to you, and I'm sure there's lots that are starting to think this, and maybe we're thinking it a little bit for the last 12 months, and it's becoming more and more real in terms of how they're thinking. Like we mentioned earlier on in our conversation around strategically how they think about fee for service versus commission. Is there like a top 3 things that when someone gives you a call and says, hey, I'm thinking about this, I'm not sure what to do or how to approach it, is there maybe 3 pieces of advice you'd give a broker who's considering a changing revenue model?
Well, get your conversation with your clients right. So determine what your fee structure is going to be, because you can set it at whatever you want to, really, and how you justify that fee is really that's relevant to you and your business. So first of all, it's coming up with the fee formula that you want to charge, whether that's fixed fees or percentages of premiums or percentages of turnovers. I mean, there's so many different ways you can do it, or even an hourly rate like accountants and lawyers. There's so many different ways to formulate your own fee structure. So once you've done that, then you can much more confidently discuss those fees with your clients up front before engaging with them. So similar to the whole informed consent process of, hello, Mr. Client, to sell you a policy, I need to get your approval for commission. It's no different with fees. By the way, we charge a fee. This is our fee structure. It's outlined in our FSG. It's a very easy conversation. So then it's, okay, how do we train our staff? How do we talk to our clients about this fee for service model, and getting everyone on the same page so that you're confidently having that conversation as a business with your clients and prospective clients, and then of course aligning your advertising and marketing and brand to that message.
Lisa, that sounds like a pretty good playbook to kick things off. Look, thank you so much. I know it's been short. It's been great to catch up. I've been following your progress since we last caught up. It's great to see the business go from strength to strength, and I'm sure that we'll see more and more change in the industry as these commissions come through. So maybe we'll chat in 12 months' time and see what's happened.
Sure. Always happy to chat, Nigel. Thank you.
Thanks, Lisa. Have a wonderful afternoon.